Hello and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. In this edition, we're going to take a hard look at the second quarter GDP numbers released by the CSO, the Central Statistical Organisation, on Friday. And hopefully by the end of the half-hour discussion with my very level-headed panelists, we'll have more light than sound, unlike what we've been seeing in the recent heated discussions witnessed in the context of GDP numbers in the back series. So let me welcome to the show Sudipta Mandal, eminent economist, formerly with ADB, and Pranab Sen, the first Chief Statistician of India and presently Program Director, India Central Program of the International Growth Centre, who will, both of them together will undoubtedly dispel a great deal of the mystery surrounding the GDP numbers. Let me start by asking you the obvious question. How would you interpret Q2 GDP data? As an indication that the economy has got over the bumps of demonetization and GST? Or is it disappointment, given that there is a sharp decline from Q1 GDP growth numbers? Let me start with you, Pranab.
Well, Q1, of course, was an aberration because it was on an extremely low base. The base in Q2 also is on the lower side, but, it's starting to recover. Now, if one discounts these factors, then the GDP number, on a comparable basis, doesn't look very good at all. It looks sub 7%. And that's worrying. But I think the bigger worry in the longer run is the fact that the agricultural sector, in terms of the nominal GDP, which is what the farmers are making, is extremely weak. And since a large part of our future growth in consumption demand is going to be driven by rural India, this does not bode well at all.
Sudipta, would you agree with Pranab's assessment? And when we talk of recovery, would you go by the growth numbers or give more credence to the capital formation numbers? I'm asking you this particularly because the growing skepticism of GDP numbers amidst calls that needs to be more in sync with high-frequency data and higher growth doesn't really gel with the fact that GFCF, even though it's improved in the latest 2 quarters, it has been declining for quite some time and is nowhere near the peaks that we had attained earlier. Sudipta?
Yeah. If you look at a series of quarterly data, not just the Q2 of this year or Q2 of last year, both the the GDP as well as the the capital formation growth rate have in fact been quite buoyant after the shock of the dual shock of the demonetization plus the rollout of the GST. So since then, of course, there are little ups and downs, but actually my take is that the economy has been on a recovery path now for over a year, which means about half a dozen different quarterly observations that I'm referring to. That being said, I agree with Pranab. The Indian economy is very peculiar. There's, this dualism that reflects the fact that the overall picture may be looking good, but there are large segments of the economy, particularly agriculture, the rural sector, which accounts for more than half our workforce, where things are problematic. Growth has generally been low, the prices have been quite depressed, and I think, you can see it on the streets, the farmers' distress, almost every other day in various parts of the country you're seeing these agitations, and they reflect a reality, underlying reality. So there is this very dual picture overall, and particularly if you look at the manufacturing data that has come in, the industrial sector data, it's all looking good. And of course the price situation has been quite benign. But there is this large segment of the economy where there are problems, and they matter politically and economically.
And Pranab, I'm sure you agree with Sudipta that the Indian economy, it's very difficult to really make sense of it entirely. It shows one picture at one level and another picture at quite a different level. So what to your mind explains the disconnect between GFCF and the growth? Because even if you accept that there are leads and lags, the fact is that GFCF has been improving in the last 2 quarters. So why has growth not picked up commensurately? And why was growth not so much slower in the previous quarters? Because GFCF had declined very sharply. Pranab?
Well, Mythili, the fact of the matter is that in the short run, investments really add to the demand. They don't add to the supply. The supply comes later. So that's one thing. So one shouldn't say that just because the capital formation has gone up, therefore production capacity has gone up. It's not an instantaneous transformation. The last time I actually examined this number was that there was on average a 2.5-year lag between the commencement of an investment program and its maturity. So we need to wait for the GFCF to show up in the production numbers for a while. But I think there's a more fundamental issue. The issue is who is investing? If we have a situation where both the corporates and the MSME were investing, you would have seen the GFCF reflected in the production numbers much earlier, because the MSME sector does have much shorter time lags. However, my sense is that the bulk of the GFCF growth is either in infrastructure or in corporate India. Now, in the case of corporate India, we have another problem on our hands, which is capital formation can go in either in creating new capacity or in upgrading technology. If it is in the upgradation of technology, it doesn't necessarily add to the capacity. What it does is it adds to productivity. And that can be bad news for employment.
Sudipta, how would you look at the numbers? As good news or bad news? Good for productivity, bad for employment, which is what we need most of all in this country? And how wise is it really to extrapolate even a single quarter or 2 quarters GDP numbers to get a sense of growth for the entire year?
First of all, let me say I completely agree with Pranab that you look at the investment data, the gross fixed capital formation data, not because it's adding to capacity, that's going to come later, but it is a source of demand. There are 3 basic sources of autonomous demand, as you know. One is public expenditure, the other is the investment, and then there's the net exports, or in our case it's net imports, which is a leakage from demand. It is from that point of view that the rise in the investment rate, we have not yet approached the peaks that we had, like 5-7 years ago, but I think we are on that track. And if you compare the quarterly data on gross fixed capital formation over the past, I would say 6 or 7 quarters, you will see that it has been it's been rising. And it is a demand pull effect on growth, not at all a supply side thing, as Pranab is saying. Now, that being said, I think he may also be right that a lot of this may be coming from the corporate sector, because we all know that the MSME sector has been in the doldrums ever since there was twin shocks, and I'm not sure that that part of the economy has quite recovered. But just like agriculture, the MSME sector accounts for a large part of employment, but a much smaller share of output. And as a result, you get this kind of disconnect, that the output picture may not be telling you what is actually going on in terms of people's jobs and employment and the income accruing to the large mass of people. So there's, what I'm trying to drive at is there's this two-sided picture. There's something very positive, but there are also sort of looming issues on the negative side, and we haven't yet gone into issues about risks and so on. Maybe we'll talk about that later.
Absolutely, which is why it's very dangerous to jump to quick conclusions. So Pranab, even as we celebrate the good performance in manufacturing and construction, both of which are generating employment, and even agriculture, if we look at the quarterly growth average over the past 8-9 quarters, it's 4% plus. So what explains the disconnect between agriculture growth at the macro level and farmer distress? You spoke about agriculture prices being depressed, but what is the way out, Pranab?
Well, you see, Mythili, the thing is that a lot of hopes and a lot of fears were being placed on the MSP hikes, right? Now, we are well into the harvesting season. It's almost coming to an end, in fact. And we have a situation where the market prices of food products have shown absolutely no increase at all. So the MSP has clearly not been effective in raising prices. My sense is that we've actually got hold of the wrong end of the stick. The problem that's happening is that in the cash economy that we talk about, the Bharat, there is a serious liquidity issue. We talk a lot about the liquidity issues in formal India. We simply do not talk about the availability of liquidity in Bharat. And my sense is what you're seeing in terms of prices is a classical Friedmanite problem of a serious shortage of liquidity.
Sudipta, would you agree that it's a problem of liquidity even in the rural areas? One never thinks in terms of liquidity issues in the rural sector. But could that be the reason why there's so much farmer distress? And what can we do about it? Sudipta?
Yeah, this whole problem of the agrarian crisis, I think to get a good fix on it, you need to look at a framework where you don't just have farmers producing and consumers consuming. In between, there's this huge community of traders, from the guys who are picking up products at the farm gate at very low prices, to ultimate retailers who are selling to you and me at prices of which, according to whatever numbers I've seen, only 25% actually goes back to the actual producers of farm goods. In other words, there's like a 300% markup. Now, while certainly traders have to earn their living, nobody would agree that a 300% markup is reasonable. And while on the question of MSPs, who is getting these hiked MSPs? It's not those poor peasants in the farms. They are selling off their products at very low prices, and it's the traders who are then coming to the godowns of the food corporation and so on, and then realizing these higher prices. So apart from the issue of credit, which Pranab has flagged, I think this whole issue of the nexus between the producer, the trader and the consumer, and the large share of value addition which is in fact accruing to the trader, which to me is a big part of the problem. And how do you fix it? I don't think there are any short-term problems. I have been recently writing and talking about the need to have a completely reorganized type of production in the agricultural sector, but that's a big issue. I'm not sure it's something we want to get into just now.
Yes, indeed. The agriculture sector needs much more attention than it's got historically and even now. Because the fact is that despite the heavy markups that you talked about, Sudipto, food inflation is still very low. So imagine how little the farmer must be getting. But I'm afraid it's time for us to slip into a very short break. Please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and I'm in discussion with Pranab Sen and Sudipto Mandal, trying to make sense of the Q2 GDP numbers. How should we look at the numbers? Pranab, before the break, we were talking about the sectoral breakup and GDP numbers overall. But there is this tendency to see GDP results as the outcome of policy actions of the incumbent government. But by that logic, in fact, Trump should be patted on the back because the US economy is doing so well, and all economists will shudder at the kind of policies that he's following. So how should I look at GDP results really? Something discrete, or does it continuum? And why is it that both politicians and the general public fail to see this?
Well, the fact is that there are two things. One is that the productive capacity and the productive capabilities of the economy are built up through history. It comes from the past, okay? But the realization of the capacity and the capability does depend very substantially on the policies of the incumbent government. So, you have to look at both. You can have great policies of an incumbent government, but if the investments had not been made in the past, not much is going to happen. So credit would have to be given to both sides of the story.
It would seem so, certainly, because as I said, going by Trump's example, the policies that he's following would make every economist shudder. But the US economy is growing so well, which brings me to my next question, Sudipto. So can we really draw any policy lessons from these numbers and the trade-offs between short-term stimulus versus longer-term reforms that really lay the foundation for subsequent growth? And how many governments really have the courage to go in for structural reforms if it is going to have a short-term hit on the macroeconomy?
I think at this late stage of this government, or into its last 6 months, we should probably forget about long-term structural
No, not just
reforms.
This government, any government.
Primarily focused on what will look good. Yeah. Any government towards this stage of, the last 6 months, it so happened there's one government in place now. That's why I mean this government only in that sense. It's in the last few months of its thing, so we should forget about structural reforms at this stage. However, it does need to do a lot of things to maintain the stability of the economy. Because I don't think that a 7% growth rate, is that bad, and the price which is very benign at the moment. But there are risks down the, further down the road which we must guard against. There is certainly this whole issue of the trade war going on between the United States and China, and we can go into it, but I think it affects us adversely, not positively. Right now, the oil prices are very low. However, who knows what will happen, 1 or 2 months down the road, given all the tensions that are building up in the Middle East between the US and Saudi Arabia and so on one side, and Iran and Syria and Soviet Union, Russia on the other. So there are a lot of risks on the external situation, and it is already reflecting. If you look at the net exports data in this quarter, you find that the deficit had actually gone up compared to last year as a proportion of GDP. So it is already reflecting on that, and we need to be careful. In terms of other policies on the fiscal side, I think we should try to maintain fiscal prudence as far as possible, given that we are getting into election season. And on the monetary side, I have not understood a lot of noise being made about why you need to give a stimulus to the economy and so on, and therefore you should reduce rates, etc. The economy is doing quite well, a 7% growth rate, plus minus, a few percentage points here and there is not bad at all. I don't think it calls for stimulative monetary policy, keeping in mind that our real interest rates are quite high. It's about 3% in real terms, and that's a very high real interest rate, real policy interest rate.
Absolutely. In fact, that is the problem with macroeconomics and macroeconomic data. Do you see the glass as half full or as half empty? And Pranab, Sudipto talked about too late in the present government, tenure to do any structural reform. But my question was, even for any government, take say for GST. Now, GST definitely did have an impact on, growth. But that is a structural reform which was very necessary. So my question is that if it is going to tell on your macroeconomic data, the health of the macroeconomy, how easy is it for governments to really bite the bullet?
Well, it's never easy for governments to bite bullets, right? But the fact of the matter is that government after government has taken decisions which have been difficult. So the governments aren't totally populist all the time. I mean, they do sensible things quite often. So, I wouldn't brush the governments off just because they have elections to win.
Okay. Sudipto, Pranab is very charitable to governments, I think, more than most people on the street. But what was your take? What do you think the outcome of these results, the GDP Q2 data, would mean for the coming elections, the interim budget? Do you expect the government to do something populist, or will everything depend on what we see on December 11th?
I have to say that so far the fiscal behavior of this government has not shown that they have any tendency to be fiscally profligate, and I think that must be recognized. As far as the growth outlook, if you take the first half of the year, that's Q1 plus Q2, because Q1 was very high, we are at about 7.4%. So even if Q3 and Q4 slip slightly below 7%, I think the probability that we will end up with a growth rate of 7% for the year as a whole is very high. And given that, I don't see why the government should worry too much about the growth story. And it's in a very comfortable situation on the price side, especially given the dip in oil prices. And that again is something that is it's a very sensitive political issue, as you know, in this country. So I don't expect any major radical shifts in policy, anything going forward. The pressure will be to ease up on spending, but for reasons that we have just discussed, there is, from a macroeconomic management point of view, that would not be desirable.
Yes, in fact, this is a lucky government because just when there were dark clouds gathering ahead, we have the oil price almost collapse, as it were, and that brings a great deal of relief for a country like India. But Pranab, Sudipto talked about the tight monetary policy and how real interest rates are quite high. And the fact is that high real interest rates does lead to a loss of output, particularly manufacturing growth. So in hindsight, have we paid a price for getting inflation so low? Because the midpoint of that inflation range was 4%. Now we're close to the low 3%. So have we paid a price in retrospect in terms of output loss, Pranab?
Well, Mythili, can I bring in another dimension since we're talking about monetary policy, which is, have you noticed what's happened to the exchange rate? I mean, it has now slipped from 73 plus to nearly 69 rupees to the dollar, right? This, along with the reduction in the oil prices, is going to be depressing your inflation even further. So now we do have a situation where, as far as the government is concerned, it has to really look at two issues. One is the point that Sudipto made, and I think that's something which nobody is talking about, unfortunately, other than him, which is the fact that given the trade war, given the global uncertainty, I think India is becoming the epicenter of defensive behavior by both the US and China. And we are seeing a lot of stress on our net export position. Now, with the rupee strengthening, that's just going to get a lot worse. So as far as RBI is concerned, today, if I were sitting in the RBI, I would worry as much about the exchange rate and whether or not I should actually try and weaken it a little bit, as I would about what's happening to prices and growth.
Yes, and true, very true, Pranab. But unfortunately, the RBI has been so focused on inflation that it really doesn't pay as much attention to the exchanges as it ought, in my opinion. But Sudipto, would you agree? And given that the external sector has always been an Achilles heel, are we going to pay a very heavy price for this neglect of the exchange rate?
Well, that's an inference that we are making. Whether internally the RBI is neglecting or not, I don't know. In the past, it certainly has paid a lot of attention to it. But that being said, certainly a strengthening of rupee is not going to help our trade deficit at all. And so, while it's helpful in terms of oil prices already being low and etc. On the inflation side, I don't think it's very good for us in terms of our external trade situation.
Pranab, the fact is that GDP revisions are par for the course. In fact, RBI recently brought out a paper on how frequent GDP revisions actually complicate policy making. And Dr. Subba Rao, the former RBI governor, famously said that the stimulus package continued longer than warranted merely because GDP numbers were subsequently revised upwards and initially suggested that the economy was still in need of support. Can we minimize such risks by, say, the use of more high-frequency indicators?
Look, we are using all the high-frequency indicators we have. Right? So unless we invent a few more, and we're trying to invent a few more going forward, and when they do come in, we will be using them more intensively. But the fact of the matter remains, Mythili, that at the end of the day, how long do you want to stay in a fool's paradise? So you had a number today, and numbers actually changed, and so 6 months later you have another number. Do you want to say, I don't even want to know what the truth is? I'm perfectly happy going with what is a bit of a fable.
Okay. Sudipta, I'm not even going to ask you that question because you've been at the receiving end of so much of, controversy, flack after you did the back series. But I'll just give you one quick final word on GDP revisions in general. One quick word.
Well, let me say, on this platform, I have a request to Pranab, because he spent several years as the chief statistician leading this, that at some point, if he would come out with a note clarifying exactly what has happened during the change to the 11-12 GDP base year, the different sources, methods and so on, and its implications for adjustments later, what have been the problems. A very straightforward note by a person who is now not an interested party, but knowledgeable of what has gone on, would actually really help the debate that has been going on. That apart, the main point I would like to make is that that, you know, where data production is concerned, the entire data production system should be ring-fenced from all this political buffering. And one way of doing that is to institutionalize an arrangement where the data production mechanism is independent of this or that ministry.
Oh, absolutely. But we'll have another macros on that, Sudipto, as well as Pranab, and I'll hold you to it. But I'm afraid it's time for us to end this discussion because we're really out of time. Thank you so much, both Pranab and Sudipto, for joining me in this discussion. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at TT Now.